Hey everyone, welcome back. Ready for another deep dive? Today we're tackling something that's probably on everyone's minds lately, especially with that April deadline looming closer than any of us would like, probably. Taxes.
It's that time of year again.
It is, and specifically, we're zeroing in on U.S. federal income tax brackets for 2023 and 2024.
The bread and butter of tax season.
Exactly. Now, we know this might not sound like the most exhilarating topic, taxes, right?
Not exactly a party.
But trust us on this one. What we uncovered today could actually help you keep more of your hard-earned cash. And who doesn't love that idea? We've got some great resources to guide us today, both from Time Trex. One's an article that breaks down those 2023 and 2024 tax brackets. Nice and simple.
Super helpful for getting a clear picture of where things stand.
Absolutely. And then we've also got our hands on their paycheck tax calculator.
Which is where things get really interesting, I think. It's where the rubber meets the road.
For sure. So, in a nutshell, think of this deep dive as your one-stop shop to understand how those tax brackets work, what's different now in 2024, and most importantly, how it all shakes out for your very own wallet.
Sounds like a plan.
All right, let's do this. First things first, for anyone who's a bit fuzzy on this whole tax bracket system, maybe you're new to this or just need a refresher, let's keep it simple. Imagine a staircase. Okay.
I like it. Visuals are good.
Each step on that staircase, that's your tax bracket. It represents a certain range of income. Now, here's the thing. As you climb higher on those stairs, meaning you earn more income, the steps, they get steeper.
Steeper steps, steeper taxes.
Exactly. And those steeper steps, they mean a higher tax rate gets applied to that portion of your income.
The key point here is that it's just that portion. It's not like your whole income suddenly gets taxed at the highest rate once you hit a certain bracket. A lot of people get that wrong.
Right. A really common misconception. It's all about those incremental steps. So let's break it down. In the U.S., we've got 7 of these income steps, each with its own tax rate. We're talking 10%, 12%, on up the ladder. And those rates, well, they can apply a bit differently, whether you're filing as single, married, head of household. You get the idea.
Different strokes for different folks.
Exactly. But one thing that stayed pretty consistent is that the brackets themselves haven't stayed put.
Oh yeah, they tend to move around a bit, don't they?
They do, and this year's no different.
Gotta keep us on our toes. They sure don't. And that actually reminds me, we should probably look at that Time Trex article now, right? The one about those 2023 and 2024 tax brackets.
Oh, you mean where they actually break down the numbers?
Exactly. I think would be really helpful for folks to actually see how these brackets have shifted, get into the nitty-gritty of it all.
Totally agree. So just a quick heads up for everyone listening. If you haven't already checked out that Time Trex article, it might be worth having it handy as we go through this.
Couldn't hurt.
Okay, so the Time Trex folks have done a really nice job of laying out these brackets side by side for us, 2023 versus 2024. And you know what jumps out at me right away?
What's that?
Pretty much every single bracket has shifted upward for 2024.
Yep, that's inflation for you.
So it's not just like a random change. They're actually trying to adjust for the fact that, well, everything costs more these days.
Exactly. It's all about trying to maintain some semblance of fairness in the system.
Right, because otherwise we'd all be getting sneakily bumped into higher tax brackets without actually seeing any real increase in our buying power.
Precisely. It's this sneaky little thing called bracket creep, remember?
Ah, right. Bracket creep. Like that feeling when you go to the grocery store and your usual basket of goods suddenly costs 10% more.
Ouch. Yeah, I feel that.
Yeah, nobody wants that with their taxes, too.
Not at all.
Speaking of not wanting things, capital gains taxes. I was kind of intimidated by that phrase for some reason.
It sounds scarier than it actually is.
The Time Trex article did mention those. Maybe we should unpack that a bit.
Definitely. So, in a nutshell, when you sell certain assets, things like stocks or real estate, and you make a profit, that's your capital gain. And naturally, the government wants its cut.
Makes sense. But it's not as simple as just slapping your regular income tax rate on that profit, right?
You're right. It gets a little more nuanced. See, the U.S. tax code distinguishes between short-term capital gains and long-term capital gains.
Okay, so short-term versus long-term. What's the difference? How long do I have to hold on to an investment before it magically transforms into a long-term gain?
1 year. That's the magic number. If you hold on to an asset for less than a year before selling it for a profit, that's short-term. Those gains are taxed just like your regular income using those 7 brackets we talked about earlier. However, hold on to that asset for more than a year and bam, you're in long-term capital gains territory.
And those are taxed differently.
You bet. Long-term capital gains are generally taxed at a lower rate than your ordinary income. We could be talking 0%, 15%, or 20%, depending on your income level.
Interesting. So there's actually a tax incentive to hold on to investments for longer.
Exactly. It's one of the many ways the tax code tries to influence economic behavior. They want to encourage people to invest for the long haul.
Huh. Makes you think twice before hitting that sell button, right?
Right. And this all ties into another important concept. The Time Trax article touched on the difference between your effective tax rate and your marginal tax rate.
Okay, I've heard those terms thrown around before, but honestly, I'm never quite sure what they really mean, practically speaking.
No worries, it's a common point of confusion. Let's clear it up. So your marginal tax rate, that's the rate that gets applied to your very last dollar earned. It's essentially the highest tax bracket you reach, the one you're currently sitting in, based on your income.
So it's like the top rung of your personal income tax ladder at this moment in time.
Exactly. But here's where people sometimes trip up. That marginal rate doesn't mean your entire income gets taxed at that highest rate. Only the portion of your income that falls within that specific bracket is subject to that rate. Confusing? Maybe a bit important, absolutely. And that's where your effective tax rate comes in.
Okay, so effective rate. Is that like a bird's eye view of my actual tax burden, taking everything into account?
You got it. Your effective tax rate is the average rate you're actually paying on all your income. It factors in all those different brackets and rates you fall into, giving you a much more accurate picture of what you're paying overall.
So it's like even if my marginal rate is, say, 32%, my effective rate might be lower because a chunk of my income gets taxed at those lower brackets.
Precisely. It's a weighted average, remember. Now, why does all this matter? Let's go back to those real-life scenarios we were talking about. That job offer with the raise, for example.
Oh, right. The one that might bump me into a higher tax bracket. You're saying knowing my marginal rate helps me figure out if that raise is really worth it after taxes.
Exactly. It's all about that take-home pay, right?
Yeah.
That's what really matters at the end of the day.
Right. It's like no point in getting a bigger slice of the pie if the tax man takes a bigger bite out of it. Right?
Exactly. And let's not forget about our friend, the long-term capital gain.
Oh, yeah. Holding out for that sweet, sweet lower tax rate.
Imagine this. You're getting ready to sell some stocks. You're so close to hitting that 1-year mark for a long-term gain. Knowing the difference in tax rates, even waiting just a little bit longer, could potentially save you a significant chunk of change.
Patience really is a virtue when it comes to taxes, huh?
You could say that again, and I think that's a key takeaway here, honestly.
What's that?
Understanding all these little nuances, these tax brackets, these different rates, it can feel overwhelming, sure, but it doesn't have to be. A little knowledge in the tax department, it's empowering.
I like that. It's like having a secret weapon in your back pocket come tax season, or even better all year round.
And that's something we want to emphasize here. This isn't just about filing your taxes in April and forgetting about it. It's about using this knowledge to make smarter financial decisions day in and day out.
Right. It's about being proactive, not reactive.
Yeah.
Making your money work for you, not the other way around. And I think that's a great place to wrap up this deep dive, wouldn't you say?
Absolutely. We've covered a ton of ground, those 2023 and 2024 tax brackets, the ins and outs of capital gains, even that handy-dandy Time Trax paycheck calculator. But really, this is just the tip of the iceberg.
It is. Consider this your launch pad for further exploration. Maybe dive into some research on tax-advantaged retirement accounts like 401k or IRAs. Those could be game changers.
Oh yeah, those are worth looking into. Tax-advantaged accounts, they're like those secret levels in a video game. Find them, unlock them, and watch your financial world expand.
I like the way you think. And of course, everyone's financial situation is unique. So when in doubt, there's no shame in calling in the big guns.
You mean?
A qualified tax professional. They can give you personalized advice tailored to your specific needs.
Absolutely. They can be your financial Sherpa, guiding you through those tricky tax terrains.
Love it. All right, on that note, a huge thank you to everyone for joining us today on this deep dive into the fascinating world of U.S. federal income tax brackets. We hope you learned something new, or at least found a new way to appreciate the complex dance of finances.
And remember, everyone, knowledge is power, especially when it comes to keeping more of your hard-earned cash.
Couldn't have said it better myself. Until next time, happy strategizing, and may your tax returns always be in your favor.